This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, January 13th, 2016. Euro dollar. So the euro remains pressured to the downside with a focus on a retest of that recent low that we saw at 107.11. A break below would then expose that December base at 105.21 further down. At this point, look for rallies to continue to be well capped ahead of 110, while only back above 110.60 would compromise the immediate downtrend in the euro. Sterling dollar. So cable is broken down to yet another fresh multi-year low, the lowest level since 2010, with the market trading all the way down to 143.52 ahead of this latest minor bounce. But daily studies here are well oversold, and there is risk for some form of a bounce before the market considers the next lower top and a bearish resumption. At this point, a break back above the recent high that we saw at 145.60 would take the immediate pressure off the downside and open the door for this potential correction. Any setbacks from here should be limited in favor of some form of consolidation to allow for these heavily oversold studies to unwind. Dollar yen. So we're seeing a bit of a bounce in dollar yen after the market stalled just shy of the key August low ahead of 116, with the market trading back above 118. At this point, there is risk for this correction to extend towards the 120 area, though ultimately the market is pressured overall to the downside and should test that 116.12 August low. At this point, only back above recent highs that we saw going up to the 2065 area would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has been slowly grinding higher over the past several sessions, though the market continues to be confined to a well-defined range trade. At this point, though, a breakout to above 110.50, the September peak, is favored, with the market seen towards the 115 area over the coming months. Only back below 107.15 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie is showing signs of a bit of a bounce in recent trade after the market stalled out ahead of the multi-year low from 2015 at 69.08. At this point, though, the broader downtrend remains firmly intact, and any rallies here should be very well capped towards the 72 handle in favor of additional weakness. Only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD continues with its intense uptrend, breaking to fresh 12-year highs, with the market now focused on a potential move towards the 145 handle. At this point, though, daily studies are highly overbought, and there is risk for some form of a correction before the market continues with this strong uptrend. But a break back below recent lows that we saw at 141.76 would be required to strengthen the outlook for a potential correction and accelerate declines. Until then, the risk is for additional upside beyond the recent 12-year peak that we saw on Tuesday at 143.15, 143.16, and towards the next key figure at 144. Kiwi dollar. So Kiwi overall remains pressured to the downside, though the market has shown signs of a bit of a bottom in recent trade. However, any rally should be very well capped towards the 67 area, with the market eventually favored to trade back towards the recent low that we saw at 64.29. That's the low from the 18th of November, below which exposes the multi-year lows from 2015. SPX 500. So the S&P 500 is enjoying a bit of a correction over the past few sessions, and the market could extend this correction back towards some previous support, now turn resistance, in the 1993 area. A lower top would then be sought out ahead of the next downside extension towards next key medium-term support at 1870, which represents the low from the September 29th, below which would then expose the critical August base around the 1830 area. Gold. So although we've seen some setbacks off recent highs in gold, the recent breakout beyond 1100 is a significant development and suggests that this pullback is corrective in favor of the next upside extension beyond the recent high that we saw around the 1112 area. At this point, look for the setbacks to be well supported in the 1070 to 1080 area, with only a close below 1070 to compromise the newly adopted bullish outlook for the gold market.